Hi guys, welcome back to our weekly market outlook. Today is Sunday, the 11th of May, with an interesting week. Last week gave us a ton of news events. However, the question is going to be, are they going to interfere with markets moving forward? Or will we just get an array of new data, new economic data, and new data from the economic sentiment side, plus obviously from the geopolitical tensions side? With that, we shall start with the news events this coming week. We got claimant count change on Tuesday that might interfere with markets or give us some new inflows. However, the important story, and that's above all, is the war in the Ukraine, where the US have started, or basically Donald Trump starting to give potential ideas, a trade deal or a deal to get access to rare earth among other commodities might be obviously of a market sentiment changing motivation. The general key part is, though, that the European politicians have now followed up. Germany's Chancellor Merz has gone to France, talking with Macron, the Polish Prime Minister, and obviously the English guys. They are all now sitting together, and seemingly Vladimir Putin stated, hey, let's make a break of fighting for a couple of days. The Europeans said, let's extend this for a longer period of time, at least for a month, during which time we might get peace talks underway. It's at least a start to potentially a better situation as what we face and see right now. And that, in general, might lead to a positive sentiment in general market motivation. Looking at general markets, we see that the precious metals markets have started to resume some upside motivation. We see generally that the silver market is about to kind of break potentially higher. Now, obviously, no trading on the weekend. Whoa, this doesn't really look kind of extremely cool. But looking at this trend line, if that makes somewhat sense, a break of the such zone plus a bit of a retracement could lead to another break higher. What if the US dollar, though, is going to give us a clearly opposing sentiment view on that current situation? The silver market is about to rise somewhat of longer-term charting patterns. We can see and observe that the silver market, based on the monthly chart, the earlier days, the market went slightly lower, but the latter days, and we talked about this basically last week, and that's exactly how we expect the situation to be, might only unfold with upside rising motivation if we see basically a breakout above the recent high here, which is not an all-time high, but a high point which we've not seen in a very long period of time. So guys, stay tuned and see how the market momentum goes in the next couple of trading days. Similarly, the gold price was obviously rising quite sharply this current week. We had seen this market earlier in the week moving higher and now seemingly starting to weaken. This looks like a continuation pattern on based on what we've seen here, basically a retracement, and it looks like for now the downside momentum in gold might be fueled by one thing, and that's the US dollar's motivation. The greenback is about to maybe stay a bit stronger in this market. And the idea behind this was simply last week's information in regards to the Federal Reserve. FOMC meeting caused for no change, no adjustment, basically. And let's recap. I was about to say last week. Let's recap what we've seen actually was this week. So we can see that in this case, there was no change happening. Basically, the central bank, the FOMC committee, the central bank, the Federal Reserve, left rates unchanged. We see this here 4.5%. It's the federal funds rate. So between 4.25 to 4%, the current ongoing rate motivation. And that was one true and very fond statement of Jerome Powell. Donald Trump, as the politician, as the president in the US, can tell what he wants to say. And I am the head of the FOMC committee running the Federal Reserve. What I say makes total sense, and what I say is independent of any meaning, any ideas, any say what any politician wants to, translating into like, guys, we don't want to adjust interest rates. We keep them unchanged. And this might be a strong statement to market participants. Independence, that's the bottom line. Subsequently, also this week, we got the Bank of England, an expected rate cut, which was anticipated, happened from 4.5% down to 4.25 percentage points. That's translating as well towards the pound losing some momentum. And the market seems to kind of be extremely interesting. The market sentiment looks like it's going to weaken similarly the same as we've seen in this recent market. Now the arrow stays the same here, but we saw the same, and it makes actually perfect sense here with the charting patterns. That's the euro dollar, and kind of mirroring that to the pound US dollar, we see that both currency pairs at the high points look kind of quite similar here, yet at different figures. The euro slightly weaker, about to break into that range bound swampy area with downside momentum being expected, and the pound US dollar potentially doing the same, whereby the pound looks actually rather slightly stronger as compared to the euro. And looking at the economic data, what we've seen basically recently, we can observe that the current situation, and that's actually what's upcoming here also this week, that the upcoming data is kind of supporting maybe some strength in the greenback, in the dollar. What are we talking about? We have consumer prices from the US, core data, expected to rise 0.3%. That could give us some information in regards to tariff situation, towards inflationary story, to why also Jerome Powell might be right in saying that he leaves rates unchanged somehow further, as he wants to have more leeway, more headroom in order to kind of potentially later on cutting interest rates even further. Back towards the dollar, towards the greenback, CPI data, if it's coming out at this higher level, again, last time expected at 0.3, it was kind of lower. But what if now we got a ton of imports in the US, kind of a preview or preliminary imports to the United States? If tariffs rise, which they do, especially in regards to China, we come to this at a later point during our session, import prices will rise. So consumers will face the burden of rising prices, at least during next month or the subsequent month thereafter. Currently we can see that the market sentiment might remain in a positive pattern, but if the dollar kind of gets some tailwinds basically from those rising prices, then we should see those numbers implemented at some point soon. Those are the recent data points. We see consumer prices potentially rising, at least as per the expectation here. Monthly figure, well, slightly higher, and that's the short-term market motivation. Annual figure expected to remain the same. We shall see how this one ends up in the next couple of months, because the disturbance in terms of the economic sentiment is seemingly there already. But the short-term market motivation here in regards to CPI data might give us further motivation to believe that the dollar is gearing up some steam, at least for now. The Australian dollar, by the way, is also kind of starting to depreciate somewhat. Numbers wise, we see that the market did a bit of a V-shape, reverse V-shape here to the downside again. Market pushing higher, and now the latter days this week until Friday basically moving lower, giving us the belief that there is simply this strong basic 50 moving average, which looks to kind of fall somehow further. And if this recent figures can basically say, and if that makes somewhat sense here, this trend line I'm driving in, if the market's going to weaken even further below that support line, we might see the Australian dollar kind of pushing even more to lower price levels. An Australian dollar which remains weak is going to be the important part in terms of the economic sentiment, as a bit of a preview. Now, looking into or towards the future data points we have. We had economic data we had from the earnings season's numbers, which have been rather positive, right? Looking at big tech, we got some data as well from some companies coming in this week. However, looking at these figures we've seen here basically in markets, we can observe that the upside in the S&P 500 might still be there, and that could be something which we see is supporting the sentiment maybe higher. Now, that's the S&P 500 just trading right at this edge here, which is the 50 moving average. The 50 moving average about to rise somehow further in a way. Somehow any break above this high point could cause the market sentiment to remain and to stay positive in the S&P 500, at least for now. Let's kind of move forward and see what the NASDAQ is going to tell us. Wrong arrows here, but again, look at the NASDAQ situation. Now, if you're moving back to the weekly chart, exactly that mirrored over to the new charting pattern here, and the NASDAQ tells us the same story. The NASDAQ is about to break already this 50 moving average and about to break the high points, fueled by this current outlook, fueled by the situation, maybe as well that the economic sentiment remains somewhat positive in a way. However, the burden, Trump's burden in regards to economic sentiment and in regards to rising prices might cause a bit of a harm towards what we see here right now. And remember as well, if the Federal Reserve is going to cut interest rates, this would be a response to incoming weaker market data. This might be also something which kind of gives the market, first of all, cheaper liquidity, but second, also showing an important news. Hey guys, the economy is just about to weaken slightly. We got to counteract there, and we got to cut interest rates due to that reason. However, economic figures recently have been somewhat positive. They were not overly bad. And looking at the earnings season, they have not been extremely bad either. So the figures here, in this case, the figures at least observed by market participants, might at least support the stock market sector for now to move somehow higher. And that's what we see when looking at not only the S&P 500, but also the NASDAQ in general. So the upside motivation in those markets looking good, looking positive. And that's exactly one thing which brings us to the crypto world. Crypto markets have performed extremely cool. Bitcoin rushing towards higher price levels. Any reason for this one? We can speculate. But one reason, it's following stock markets. Here we go. The Bitcoin market simply just about to break the 107,000, the recently created all-time high. 110,000 is just about maybe to be retested as well. 120,000 is a figure we might be able to see anytime soon. We can also just try to play this. I can't zoom out here much. Let me check if that works. No, I'm just a bit limited in my charts. But one thing we can use, and that's the Fibonacci extension, the 161 retracement. Yeah, I would need to kind of go to the trading view charts, over to the trading view charts, right? So guys, basically the recent high point all the way to the correction. And now if we're breaking out of this high point, we would have a, 120, I would bet 125, 130,000 might be a high point, a resistance point based on this Fibonacci extension, which is going to be a potential target. And this target might be something which Bitcoin might use. Now, if the Bitcoin market rises, how are altcoins performing? Utterly positive, I would say. First of all, though, what we see is if crypto markets, if the Bitcoin is rising, it depends on how much of a dominance is the crypto market or is Bitcoin in general having. Looking at it from that perspective here, we can see the market cap and the fear and greed fear and greed index here. Altcoin season, yeah. And there we go. We got the exact numbers here. The Bitcoin market is still obviously the mother, and at the moment rising somewhat. But if the altcoin season is starting, or if we see that other altcoins here, comparing to the Bitcoin, other altcoins will take over the market dominance, obviously only some of it, then they might get a bit of a flush to the upside as well. And that's what we can observe here right now. So, surely this might be one of the reasons which is behind this story. After the rise in Bitcoin, we've now seen that Ethereum starting to push higher. We see, and let's move back towards the Bitcoin market. Bitcoin already moved way to the upside here and is currently doing the same still. But Ethereum only started to follow with a lag what Bitcoin already did. So Bitcoin might kind of not weaken, but Bitcoin's rising motivation, rising momentum might weaken, saying the market might rise, yet it might rise slower. And now we might see that the other coins, the altcoins, will follow. Ethereum already following kind of nicely, XRP following as well, not overly bad, where we have to say that the XRP token was never correcting extremely a lot. Initially, I stated beforehand that I would have expected the market to correct way below that level towards lower areas. However, with last month closing candle, I said as well the market might move to the upside, and we obviously capitalized on that. By the way, guys, if you're not part of our trading group, check out fxstrategies.asia website. We talk about financial markets day in, die out in our WhatsApp group. We have webinars every day. I give you updates in our chat group, so focus on that one. We have a little bit of a token of appreciation here, so follow the video till the end. The upside here in XRP can be observed, and the upside in Solana obviously as well nicely behaving, and that alongside all these other tokens look positive to continue further. NASDAQ leading the way. Bitcoin is secondary, following NASDAQ with the positive sentiment driving the force. Now we have more than 70 ETFs which are currently in the approval process with the SEC in the US, and we know that some of the guys in the US have been rather, with the inauguration of Donald Trump, positively acting in regards to the crypto space. Some states in the US have also added cryptos or Bitcoin to their currency reserves. We shall see on how that plays out medium term in the end, but at least there is a positive chatter about it. If you're checking on Google, there's not too much searches for Bitcoin to give us a bit of a trend, but it seems that currently the driving force between the push to higher levels is coming from institutional investors. If any ETFs are being added to markets, that means as well altcoins might get more inflows to market sentiment. I think, if I'm not wrong, Ethereum you can trade at the future, but if we start with Ethereum, XRP, Solana, among others, so we can see that institutional investors get their access due to being able to report their positions as well, and then obviously the markets might get further inflow. So in general, the positive trend might remain in the same way. The question is just now, how does the story from a fundamental data continue when looking at it from the economic information we get, at least we get this upcoming week. Now, this last week we had the Bank of England adjusting interest rates, cut off 25 basis points, and we got the US, the Federal Reserve, which did not cut interest rates as we just debated. Interesting wise, we have data on Thursday from the US producer prices in the US, and that's something interesting here to see, right? How many goods are imported from overseas, namely China. China is one of the biggest, or is the biggest, importing as well as exporting country, second biggest economy in the world. So with that, and obviously the added tariffs, they might be reduced. Donald Trump stated, hey, the Chinese want to talk, and they are going to meet up and debate whether there will be further trade deals being done. The recent trade deal with the UK, UK trade deal, as we understand, about 10% globally, 10% tariffs added on all exports so far, excluding some exceptions, but 10% tariffs added on products from the UK exported to the US. So the consumer in the US is going to pay the price for it, but companies producing in the US, about purchasing goods, procuring goods from overseas, they might still pay the price for this. And that's what the producer price index might give us some reading about, right? So it's a delay from consumer prices. Basically, what is a producer price today with the delay once it gets to markets and people could purchase it will end up being a consumer price. So a rise in producer prices today might kind of give us an information or a bit of a preview towards the consumer prices in the next couple of months looking forward. So we got important data moving forward this week, plus we got the consumer sentiment this week, which is expected to remain positive. And my advocate, or what I might say at the moment, is we see early days in May still that the dollar gears up momentum. Euro dollar short, pound US dollar short, Aussie US dollar short, by the way, and the US dollar against the Japanese yen long, by the way. And for the guys of you here following our trading setups here, we've just bought the dollar Japanese yen at very, very lower levels, and the market already up and running. We had also sold the euro dollar way at higher levels, and the market is already kind of in our favor. So both trades already kind of in profit for now. We haven't spoken about the crypto space, but my subscribers know my story, and Bitcoin long, Solana long, among others as well in these markets. What else is new and what else is upcoming this week? We have a limited array of data. They might be interesting to observe, but I might say let's take into consideration what we see. We got a ceasefire, or at least some sort of potential deal in the making as well in regards to the Kashmir situation, India and Pakistan. So geopolitical tensions are on the back step somewhat, right? One last thing we've forgotten to check out at the moment is the oil market, because oil prices have been rising again higher, and they look like positively behaving. But when looking at it from that long-term perspective, as we said, we have been in this vacuum environment here right now, and this smells like the market is going to weaken somehow further. And I would say this is currently just a retracement higher. Early May, oil higher. Later May, the market might fall. So I might say that this next week, we see maybe dollar strength to continue. With dollar strength, we might see oil prices to basically weaken. Geopolitical tensions might be of market participating inflow in regards to the weaker oil prices. So that could drive the market back to lower price levels as well. And risk sentiment should, because of geopolitical tensions, be positive again. So I might expect as well, no, I wouldn't say I might expect, I am expecting, that's the clear term here, to give you some direct feedback. I expect here that the breakout in the S&P 500 and in the NASDAQ, maybe a slight correction here, but NASDAQ expected higher, plus the S&P 500 as well. That's what we see here based on the longer term chart, also expected to be higher. A slight correction before the market might run to the upside. Guys, token of appreciation, and just with the tag YouTube, small letters, as a coupon, I'll give you a nice discount in my website. Check out our monthly packages and just put in YouTube. The first 20 subscribers will get an extra token here using the token for the next 1 week. And we shall see. Up to you guys. I'm looking forward to welcome you in our group. Please get in contact with the contact details on my website as well if you have any more questions. Else, I'll see you here back soon. And we get Mirko next week back on the monitors to give us, in regards to stock markets, some definite feedback, some definite information. And I'm getting to you what I've promised as well, the Jim Rogers interview from Singapore. It's up and running. Sorry guys for the delay, but I have only 2 hands. Mostly they've been used for trading, but the videos are going to be ready, I promise you. See you soon. Take care. Thanks for tuning in. Leave your comments below the video, and don't forget to subscribe to our channel as usual.